Donald Trump just fired Federal Reserve Governor Lisa Cook, a shocking and unprecedented move that's rattled global markets. The dollar is sliding, gold is spiking, and Wall Street now sees a much higher chance of a Fed rate cut next month. Here's what you need to know. On Monday, Trump announced the removal of Fed Governor Lisa Cook, despite legal uncertainty over whether he even has that authority. Markets reacted instantly. The dollar dropped against the yen and euro. Gold jumped. To two-week highs, US equity futures slipped, and long-term Treasury yields climbed. Headlines from major outlets are calling this an attack on Fed independence, and that phrase alone is shaking global investors. The Federal Reserve is supposed to be independent, insulated from politics. Trump's move raises fears that he'll pressure the central bank for rapid rate cuts ahead of the election. Investors are worried about credibility. If the Fed looks political, markets lose trust. One analyst put it bluntly: there's no credibility. For viewers in the US, this decision hits close to home. If the Fed cuts rates sooner, mortgage costs, car loans, and credit card interest could all come down. Good news for borrowers, but it may also fuel higher inflation later. In Canada, the Bank of Canada often moves in step with the Fed, so rate policy there could shift too, directly affecting housing and consumer debt. In the UK and Australia, both currencies are closely tied to dollar strength. A weaker dollar usually means the pound and Aussie dollar gain ground, which changes trade dynamics and investment flows. Put simply, when Washington shakes the Fed, ripple effects are felt across all four economies. Let's break down why markets reacted the way they did. The US dollar slid because investors worry about political interference, which makes the SCAO or currency less attractive as a safe asset. Gold, on the other hand, surged because it's the ultimate hedge when trust in institutions falls. Long-term Treasury yields climbed because investors now expect more government borrowing and potential inflation if the Fed caves to pressure. Meanwhile, short-term yields dropped since traders see cuts coming fast. This mix, dollar down, gold up, yield split, is classic when central bank independence is questioned. It's not just numbers on a chart. It reflects global confidence, or the lack of it, in US economic leadership. Traders now see over an 80% chance of a Fed rate cut at the September meeting. That's a huge shift compared to just a few weeks ago. What this means for you: borrowing costs could fall sooner than expected. Safe haven assets like gold are gaining traction, and the bond market is flashing signs of stress with long-term yields rising while short-term yields fall. So, what should we watch going forward? The core PCE inflation report this Friday is critical. If it shows price pressures easing, bets on a September rate cut will solidify, and we could see the dollar sink further while stocks rebound. If inflation stays hot, markets may panic at the clash between politics and stubborn price growth. Beyond that, keep an eye on Treasury auctions. If investors demand higher yields to lend to the US government, that's a red flag for confidence. Watch the dollar index, especially against the pound and Aussie dollar, since those moves matter directly for the UK and Australia. And of course, gold and the volatility index, the VIX, will tell us just how nervous investors really are. There's also a bigger question hanging over all of this. What does it mean for the long-term reputation of the US financial system? For decades, global investors have trusted the Federal Reserve to be steady, predictable, and above politics. That trust is one reason the US dollar became the world's reserve currency, and why countries, banks, and businesses park trillions of dollars in US bonds. When a president removes a Fed governor and sparks doubts about independence, it shakes that foundation. If confidence erodes too much, it could raise borrowing costs for the US government, weaken the dollar's dominance, and even push other nations to diversify away from US assets. That's why traders from London to Sydney, from Toronto to New York are watching this story so closely. It's not just about one governor being fired, it's about the credibility of America's entire economic leadership. If you want clear, no jargon breakdowns of market chaos like this, hit subscribe and tap the bell. I'll keep you ahead of the next big move.